Hi, everyone. Marc Lichtenfeld, Chief Income Strategist with the Oxford Club. Welcome to State of the Market. I want to start off by thanking the 2,000 plus of you who have subscribed to this channel. I'm glad you find the content useful, so thank you very much. You know, last week we talked about the highest dividend yields in the market, and I said that size didn't matter when it came to dividend yields because what difference did it make if you had a 20 or 30 or 40% dividend yield if the dividend just got cut or even suspended? Well, we know that actually dividend size does matter for income investors. I mean, you're not going to invest in a dividend stock for a 1% yield if you need the income. And you might for other reasons if you think that the stock's going to go higher, it's a growth company. But if you're investing for dividend income, you do want to see a sizable dividend. So today, we are going to look at the safest high-yielding dividend stocks out there. So again, last week, there were some really high dividend yields that were unsafe. Today, we're going to look at the safe ones. So before I get to the three safest stocks that are high yielding, I want to talk a little bit about what I look for when it comes to dividend safety. So the first thing that's really important is I want to see a company that has sufficient cash flow to pay the dividend. Now, notice I didn't say earnings. There's a big difference. Earnings has all kinds of non-cash items in its formulation or in its calculation. Cash flow is really representative of just the cash that came into the company. So here's a very brief example. Let's say a company records a big sale on December 30th. They sell $1 million worth of widgets. They can book that sale and include it as revenue, which trickles down to earnings on their year-end results. But they may not have even sent out an invoice yet, much less have gotten paid. So their revenue and earnings go up, even though they haven't taken in any more cash. Now, next year, when they send out that invoice, maybe that customer returns the item, or maybe it goes bankrupt, or it's just taking a long time to pay. So we, as dividend investors, are really only concerned with the cash that comes into the company because it's the cash that's going to pay the dividend, not earnings that have all those non-cash items. The other thing I look for that's really important is a company that has a long track record of a reliable dividend that hasn't cut the dividend, and preferably that has raised the dividend every single year. So perfect example of that is PepsiCo. This week raised the dividend for the 48th year in a row. So that sets the bar pretty high for investors that they can expect a dividend increase every single year. So what do you think would happen if Pepsi, after 48 years, almost 5 decades, suddenly cut the dividend or suspended it altogether? I think at the shareholder meeting, you would have people showing up with pitchforks and torches. So track record is also a pretty good indicator. It's not a guarantee that the dividend is safe, but it's a pretty good signal that it is. All right, enough of this jibber jabber. Let's get to the three safest high yielding stocks. The first one is a master limited partnership, or MLP, which is typically a pipeline company for oil and gas. And that's what this company does. It's Enterprise Products Partners. EPD is the symbol. And it just raised its dividend in March to $1.78 per share annually. And that comes out to a whopping 10.7% yield. And it's raised its dividend every year for 15 years in a row. Now, over the past 12 months, Enterprise Products Partners has only paid out 49% of its cash flow in dividends. So it's generated twice as much cash as it pays out in dividends. So that gives us a nice buffer in case things get tough, which it is for many companies during this crisis. So that low payout ratio is why I'm confident that although the yield is double digits, it's actually quite safe. All right, the next dividend stock with the high yield that's safe, Preferred Apartments. APTS is the symbol. This is a real estate investment trust, or a REIT. It owns 101 apartment buildings and shopping centers, mostly in the Southeast. And those shopping centers, many of them are anchored by Publix, which is a very strong and healthy supermarket chain. Now, Preferred Apartments has a 7.9% yield, and REITs use a measure of cash flow called funds from operations, or FFO. And often REITs will pay out all of their FFO in dividends, 100%. Preferred Apartments does not. In 2019, it generated $62 million in FFO while only paying out $44 million in dividends. So again, it generates plenty of cash to pay that dividend. Now, it has raised the dividend every year since 2012 and never cut it since it started paying one the year prior. So it has a while to go before it's in the same league as Pepsi, but it's off to a pretty good start. Now, typically, the highest yielding stocks in the market will be MLPs and REITs, like we just talked about. But I also wanted to include a regular company, a C corporation, one that's not a REIT or an MLP in the list. So the highest yielding, safe, non-REIT or MLP that I've found is People's United Bancorp, 6.3% yield. The ticker symbol is PBCT. It's just raised the dividend for the 27th straight year. So 27 years ago, it started raising dividends. That's a long time ago. Just to show you how long ago that was, you know what the #1 song was 27 years ago? The Sign by those ABBA wannabes, Ace of Base. I mean, 2 men, 2 women from Sweden singing catchy pop songs. We get it. But you'll never be ABBA. You couldn't carry their one-piece jumpsuits. You'll never be Sweden's most beloved supergroup. Never. What were we talking about? Oh, People's United. Yeah. Anyway, so People's United Bancorp's net interest income was $1.47 billion, and it paid out just $280 million in dividends. Now, when it comes to banks, net interest income is what we look at as the form of cash flow. So again, plenty of cash flow, and it has paid out far less of its cash flow in dividends than it takes in. So again, that shows us that the dividend is rock solid. It will have the staying power of ABBA, not like those pretenders, Ace of Base. All right, that will do it for us this week. By the way, every week in my free newsletter, Wealthy Retirement, I analyze the safety of a dividend of a company that is requested by readers. So if you would like to check that out or even send us your suggestions, please subscribe to the newsletter. It's absolutely free. You can click on the link in the description. And we also have other content during the week. It's not just about dividend safety, so I hope you'll check that out as well. Until next week, I'm Marc Lichtenfeld. Thanks for watching.